Hey everybody, this is Ryan Mallory, and let's talk about stocks here. Let's talk about the S&P 500, what we saw this week, the Russell 2000, how it led the way higher, and you got the Nasdaq. Let's talk about it as well. We're going to go through the daily, the weekly, and the monthly charts for each. We're going to do it at a breakneck pace here, so be ready, and let's get right to it here. First off, the S&P 500, it goes up about 3.8% this week. You have the Nasdaq up 4.6%, but the winner was the Russell Index up a whopping 6.4%. Now here's the crazy thing. We had a big pullback in September, but we've almost wiped all those losses out except for what we saw in the Nasdaq for that month. Nasdaq still has a little bit of room to go, but the S&P 500 and Russell are pretty much right back on top of their game. They're looking to challenge their all-time highs, and we're only 24 months out of an election that's one of the craziest presidential cycles we've ever seen in terms of uncertainty and what it could mean for the stock market going forward. Nonetheless, we keep buying the dip. Why is that? Because you got the Fed. You get the Fed, they're going to be the sugar daddy. They're going to keep pumping the market. You have a meteorite hit the earth. Daddy J Powell's just going to keep pumping the market higher. He's going to keep printing. It doesn't matter what happens. It's going to be when he stops printing the money that we're going to see the big correction in the market. Now, the stock market has loved Trump for the most part over the course of the past 4 years. And so far, what we're seeing with the polls tilting towards a Joe Biden victory in November, it looks like the market's going to be fine with Joe Biden. I think the big wild card is if something from a health standpoint happens to Joe Biden, then you have Kamala Harris that comes in and becomes that president. I don't think the market's going to like her economic policies, and as a result, you could see a pullback in the markets, but that's not in the here or now. Right now, it's Trump versus Biden. Both of them are held in pretty favorable terms by the stock market as a whole. But one thing's for sure is that I do think you can continue to see a lot of craziness. I think you can see a lot of headline risk that tanks the market over a short period of time, just like what we saw a little over a week ago when President Trump came down with COVID, and then again this past week when he tweeted out that the stimulus talks were dead and the market immediately plunged 75 points on the S&P 500. That kind of stuff can still persist, but what we have seen so far is that the market's quickly pricing in this headline risk. As a result, we may see these short-term sell-offs even on an intraday basis, but the market quickly rebound and go back to all-time highs, because when it comes to the stimulus, it really can't get worse than the news that we got on Tuesday. You can't end stimulus talks after they've already ended. Now, we could restart them and then end them again. Yeah, the market won't like that too much, but I think the headline risk going forward is more favorable in regards to the stimulus talks than they were before, simply because it can't get any worse. So let's pull up the S&P 500 here first. We're going to look at it through SPY. It's the ETF that a lot of you guys trade. Right off the bat, it's setting up for a push to new all-time highs. That's important because if it can establish new all-time highs, you have a new trend that has been established, and it's a long-term trend line off of the March lows. We really haven't been able to find a good trend line going back to the March lows because we need a higher high in order to establish a new one. And if that happens, then you have a new trend line that we can follow going forward. It's a lot more sustainable because it's much more flatter than what we saw back in early March and April when it was a very steep and difficult to maintain trend line. Because here's what you want to remember. The flatter the trend line, the easier it is to sustain. The steeper, the more difficult it is to sustain. And the longer term that they are, the more likely that they are to sustain. Write that down because I'm going to quiz you at the very end. And 3 weeks ago, I talked about how this price support level going back to late February was essential for the market to hold. It's held it, it's bounced, and it's bounced to the tune of over 8%. As a result, it's a little bit overbought at this point. Does that mean it can't keep going higher? Yeah, of course it can keep going higher. Look at the price action and how overextended it got in July and August. Sure, it can keep going higher. And as anyone who's a bull, you want it to keep going higher. But don't be surprised if you see a little bit of consolidation here, a little bit of a sideways price action. And why that is important is because sideways consolidation pattern lets the market cool off a little bit before taking that next leg higher. You want a little bit of sideways consolidation, and it's good for future trade setups because it helps establish tighter risk reward parameters where there's bigger reward upside for a tighter stop loss. So that's what you want. You want to see a little bit of a consolidation. That would be great. Maybe it comes in the form of a bull flag pattern that trends slightly lower, but sideways more so. And then it breaks to the upside, to new all-time highs and beyond. You also have a short-term trend line that has been formed off of the September lows that remains intact for now, as long as the price stays above this rising trend line. And yes, it's steep. I don't expect it to hold forever. In fact, it's only a short-term trend line. But as long as it holds that rising trend line, in the short term, I'm going to be aggressive with my long positions. It's when it breaks that short-term trend line that I'll start pulling back a little bit and let the market also come back before adding more long trade setups down the road. So the weekly chart, it's pretty good, but it has a huge resistance level going all the way back to 2012 that it has faltered at time and time again. We need to make sure that if this is tested, and it can very easily test it at around 356 on SPY, if it tests that level, I'm going to start be pulling back on some of those long positions. I'm going to start taking some profits off the table because when it starts to test that, it has a history of dramatically selling off. You can see on multiple times on this chart, when it's tested, it pulls back. And until that changes, I'm not going to do anything else. It's 8 years old. It's an 8-year trend line that has remained intact. Nobody else is really talking about it, but I've seen it time and time again. It tests it and it has a dramatic pullback. I can actually see a scenario where going into the election, we test it, and then whatever the results are of the election, the market has like a sell the news effect, and it pulls back dramatically off of that all-time high resistance level. And what you have to be careful of is when you do test these levels, this is when you get most euphoric, because the market's at a higher level than it's ever been before, and it's easy to think that it's blue skies ahead, but it's at those very moments that you have to be the most cautious about your portfolio and its relationship to overall market conditions. Check out the monthly chart. Much improved. Almost all of September's losses are gone. Any kind of market pullback, you're going to want to see whether or not it can hold this 50-month moving average. It's been a key moving average going all the way back to 2012, the same place that we talked about on the weekly chart. That moving average needs to continue to hold going forward. It kind of got a little iffy there back in March when it broke below it, and February as well, but it didn't stay below it. It actually recovered before month's end and did a really good job of holding that support level and pushing to new all-time highs. Hey, before I forget, make sure to check down below, click the join button to get all of my market research that I do throughout the week. Each and every day I'm sending members of my YouTube channel my personal watch lists, some of the most intriguing charts that I'm finding on a day-to-day basis. Also, you get updates each week on all the FANG stocks: Facebook, Apple, Amazon, Netflix, Google, Microsoft, Tesla, and you're getting multiple updates each week of the S&P 500, the Russell, and the Nasdaq. Not to mention, you're also getting my proprietary indicator for market reversals. Check it out down below. Find out what package is right for you. It's a great perk to my YouTube membership channel. Make sure to do that and support the channel. Same thing with the QQQ monthly chart. This is the Nasdaq 100 ETF. You have rising support off of that 20-month moving average, and you can see too where it's gotten pretty close in the past to that 50-month moving average and never really broken it. So it gets pretty close. That might also be a reloading area as well. But what you want to be careful with on the Qs is the fact that when it gets to these kinds of levels and you start seeing some of these red candles get put in, that it gets more and more choppy over the next 4 to 6 months, oftentimes leading to a massive sell-off lower. You saw that back in the dot-com bubble when it had its epic run, and then it chopped around for about 6 months and then had a dramatic pullback of 87%. Not saying we're going to get 87% off of 50 Qs, but when you start seeing the choppiness, and we're coming into some historic news events here coming up with the election, there's a lot of unknowns there. If we start seeing that choppiness, I'm going to want to trade a little bit more careful going forward. On the weekly chart, the Qs have the best winning streak. It's on a 3-week winning streak. We talked about before how it might be setting up for a bull flag breakout. That's exactly what we're getting here. We're getting a bull flag breakout. It looks pretty good. Looks set up for the all-time highs once again. On the daily, the chart's much improved over the last couple weeks. If you remember a few weeks ago, we were talking about this massive head and shoulders pattern that was forming. You had a neckline. There was a lot of concern here from the September sell-off. Now, what we've often seen with head and shoulders patterns is they don't play out very well, especially not in this raging bull market that is very much backed and supported by the Federal Reserve. It bounced off a support level. Woo! It actually created a short-term inverse head and shoulders pattern, which has a lot more validity in this kind of a market than the head and shoulders does, even from a longer-term perspective. And what you got is you got the breakout this week. If you look at it from the hourly chart, it's much more clear the level of resistance that was broken through. The Qs are set up now to go to all-time highs with very little resistance overhead. There's some exciting stuff going on here with IWM. You have the breakout that we've been talking about for weeks now. It broke out, and it broke out in dramatic fashion. As mentioned earlier in this video, Russell was up over 6% this week. Yes! That's a big move, and it led the way higher. Nothing outperformed the Russell this week. It was amazing. It's breaking through this resistance level going back to early 2020, but you also have the opportunity for new all-time highs on the Russell in the very near future, maybe even before the election. Because when you draw a declining trend line off where it previously established all-time highs at, that's the last time we made new all-time highs in the small cap. But if you draw that line, you can see we're coming close to breaking out. It needs to break over 170. It does that, it's off to the races. It could get really exciting there. And you have this consistent chop range going back to 2018 that the Russell has found itself time and time again inside of and not able to break out. Well, good news for the bulls, it broke out of it this week. On the monthly chart, you have that 2018 breakout level even more clear and more precise. If it can break over that 170 level, new highs should be established shortly thereafter. So with all that said, we continue to march higher in the stock market despite a lot of uncertainties, despite the fact that we've had one of the most hellacious years that we've ever seen on record in human history. Everything that could go wrong did go wrong. I mean, they even took Kobe Bryant from us. but the trend continues to march higher, and until that breaks, it's very difficult to get short on this market. Even if and when it doesn't make sense, you still have to keep your wits about you. You have to say, okay, it's not about what I think about this market, it's what I'm seeing from this market. What do I think doesn't matter as much as what I see. So it's don't trade what you see, trade what you think. And when you manage the risk, because I nag on you guys about this every single week, the profits will take care of themselves. So don't get so caught up in the stock picks and what everybody's telling you to trade. Be more consumed with how are you managing the risk that's unique to you to make sure that you can be a consistent winner in the stock market, because it's all in how you manage the risk. Now, I told you I was going to bring this up at the end, and I want you guys to recollect on what I told you about trend lines. The flatter, the longer they are, the more dependable that they are. The steeper and shorter they are, the less reliable that they are. So if the S&P 500 can form new all-time highs in the days, weeks, and months ahead, then we have a nice, flat, long-term trend line off of the March lows that should be very dependable for us going forward. And I want to bring up something else in this video. What is the deal with Kodak? I mean, why are people even still buying this? It was up 13% on 40 million shares almost on Friday. What are people thinking? That makes 0 sense. Quit buying this stuff, guys. This is what I call the delete your trade account moment. If you've enjoyed this video or got anything out of it, make sure to subscribe to it. It helps me build and grow this channel. Also, make sure to like the video as well. It helps me out immensely. I always save that for the end of the video because I want to make sure that if you got to this point in the video that you enjoyed what you heard. And ultimately, that's what I'm here for. I'm helping you to build as traders. You can count on one thing. Every video I'm going to do is to help you grow as a trader, to help you build your understanding and knowledge of the financial markets. And in the process, I'm doing the same thing. It's helping me all the time to continue to do the amount of research that I do, to provide it to you guys through my YouTube membership channel, and to provide it here, right here in my videos. So make sure to like, subscribe. Thank you guys, and tell me down in the comments below, what was your best trade of the week? I want to hear about it. I like to hear the good stories. Tell me down there below. Thank you, and God bless.